I am AI Avatar of CA Ratan Mundra. Welcome to this comprehensive guide on compliance requirements for IFSC insurance offices, commonly known as IIOs, operating within GIFT City under the supervision of the International Financial Services Authority or IFSCA. Insurance businesses operating in the IFSC environment are governed by a specialized regulatory framework designed to promote global insurance and reinsurance activities while maintaining high standards of governance and financial stability. This guide consolidates the major regulations, reporting obligations, governance requirements, solvency standards, investment controls, and compliance responsibilities applicable to IIOs. Understanding these requirements is essential for insurance companies, reinsurers, compliance officers, board members, and regulatory professionals seeking to operate successfully within India's international financial services ecosystem. The regulatory framework for IIOs is built upon the IFSCA Act 2019 and the Insurance Act 1938. In addition, IIOs must comply with various regulations covering registration, investments, solvency, financial statements, appointed actuaries, reinsurance, product pricing, record maintenance, and market conduct. These regulations collectively create a structured compliance environment that governs every stage of insurance operations. Whether an IIO is engaged in life insurance, general insurance, health insurance, or reinsurance business, it must adhere to these interconnected regulations and monitor regulatory updates issued by IFSCA from time to time. IFSCA permits several categories of entities to establish IFSC insurance offices. Eligible applicants include insurers registered with IRDAI, foreign insurers, foreign reinsurers, Lloyd's entities, insurance cooperative societies, public companies, wholly owned subsidiaries, and certain body corporates incorporated outside India. Managing general agents, commonly referred to as MGAs, may also establish an IIO when supported by a valid binding agreement with a foreign insurer or reinsurer. This broad eligibility framework is intended to attract international insurance participation while ensuring adequate capital, governance, and operational capability. The capital requirements for IIOs vary depending on the type of entity and the business conducted. Incorporated entities undertaking life, general, or health insurance activities must maintain minimum capital of INR 100 crore, while reinsurance entities require INR 200 crore. Branch operations must maintain assigned capital as prescribed by regulations. IIOs may conduct life insurance, general insurance, health insurance, and reinsurance activities. However, branch offices operating in unincorporated form may only transact classes of business that are permitted by their home country regulator. These requirements ensure financial stability and operational credibility within the IFSC ecosystem. Every IIO must comply with a series of annual regulatory obligations. These include payment of annual fees, turnover-based fees, submission of audited financial statements, auditor reports, management explanations, outsourcing reports, actuarial reports, and solvency-related certifications. Annual reporting plays a critical role in demonstrating regulatory compliance and financial soundness. Failure to meet prescribed deadlines may trigger regulatory scrutiny and increase compliance risks. Therefore, organizations should maintain a structured compliance calendar and allocate ownership to responsible departments. Quarterly reporting represents one of the most important recurring compliance responsibilities for IIOs. Regulatory submissions include business data by line of business through Form IIO-A, country-wise business data through Form IIO-B, and claims-related information through Form IIO-C. Additional quarterly requirements include foreign currency compliance undertakings, foreign intermediary reporting, solvency certificates for branch entities, and actuarial returns where applicable. These submissions enable IFSCA to continuously monitor business activities, solvency positions, and operational performance within the insurance sector. Certain business events require prior approval or notification to IFSCA before implementation. Examples include appointment of principal officers and key managerial personnel, changes in management control, capital issuance, mergers, acquisitions, place of business expansion, and portfolio transfers. These approvals help ensure that material changes do not adversely impact policyholders, financial stability, or regulatory compliance. Organizations should establish internal escalation mechanisms to identify such events early and engage with regulators proactively before taking action. One of the most critical requirements for IIOs is maintaining a minimum solvency ratio of 150%. This ratio compares available solvency margin against required solvency margin and serves as a key indicator of an insurer's financial health and ability to meet obligations. The appointed actuary plays a vital role in ensuring solvency compliance. Responsibilities include actuarial certification, reserve adequacy assessments, pricing reviews, reinsurance evaluation, and reporting non-compliance to both the board and IFSCA. A strong actuarial function is therefore central to effective risk management and regulatory compliance. Investment activities of IIHOs are governed by detailed regulations requiring approved investment policies, investment management committees, exposure controls, and reporting frameworks. Investments must generally be made in permitted jurisdictions and investment grade assets while adhering to risk management standards. Beyond investments, boards must approve several mandatory policies, including outsourcing policies, foreign intermediary policies, policyholder protection policies, product governance policies, and commission policies. Proper governance frameworks help ensure accountability, transparency, and regulatory alignment throughout the organization. Non compliance with regulatory requirements can result in significant consequences, including rejection of applications, mandatory corrective actions, restrictions on operations, regulatory violations, and increased supervisory intervention. Activities requiring prior approval cannot be undertaken without obtaining authorization from IFSCA. The most successful IIOs treat compliance as a strategic business function rather than an administrative obligation. By maintaining strong governance, proactive reporting, effective internal controls, and continuous monitoring of regulatory developments, organizations can operate confidently within the IFSC insurance ecosystem while supporting sustainable growth and policyholder protection. Moon Says and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances. Risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive. Support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. Scan the QR codes below to stay connected with us.